Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about some of the top investments that I think everybody should be buying right now that carry so much reward. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. If you have any questions, make sure you guys ask them down below. So starting off with the first investment. Now the first one here is ticker symbol SPY. Now this is the S&P 500 ETF. So this represents the top 500 companies in the United States. It's led by Apple and it's followed up by companies like Amazon, Tesla, Microsoft, companies that are like world class. They are very, very top tier companies worth hundreds of billions of dollars. Now, one of the reasons why I love this is because everybody always tries to beat this. Everybody always tries to beat the S&P 500. If you can beat it, you are considered a world-class investor. But the thing is, about 95% of hedge funds and people that try to beat the market can't do it. So me personally, I think it's definitely just better to generally invest in the market. And given that we've seen some sell-off from the highs here from, 478 all the way down to 439 right now, you guys can see right now it does have some decent support starting to step in anything below 440. So for me, guys, this is just a complete pickup that I'm not even going to touch for about 5 to 10 years at the minimum. So that's definitely one to keep an eye out. If not buy. Now, stock number 2 is NVDA. Now, everybody always loves to talk crap about this company, and I understand kind of where they're coming from. There's been analysts that see a shortage, demand slowing down for the company, but I always like to ask people that see volatility of companies like this, where do you see technology going? Do you think we're getting more or less dependent on tech? Now, personally, I think that we're getting more and more dependent on technology each and every day. So given that we could possibly have a short-term sell-off from this for me is a good pickup. I understand tech is a fantastic investment, and given that it has this tendency to use this 218 mark as some pretty hard support, right? It hit it several times, hit it once, twice, 3 times, 4 times. Now it's hitting it 5 times. For me, guys, this is just an absolute pickup. But I do think a good strategy for NVIDIA would be to dollar cost average it. Figure out a good, figure out however much you want to invest. So if you want to invest $500, $1,000, just spread that out into monthly, weekly, increments of your investment. Dollar cost average it. So the beauty of that is if this continues to sell off, you're gonna average down those shares. But when it recovers, just like it's always done, you're gonna be making a lot more money because your average cost is so low. So stock number 3 is Disney. Now Disney is a world-class company, not going anywhere anytime soon. For me, I love it because it does have this tendency to use this 130, about this 131 mark as some pretty hard support. It used to be some old resistance. Old resistance does have tendencies to use it as new support. So it used to use it as resistance, sold off, broke above it, sold back down, and it hit it once, twice, now 3 times. And you guys can see even today we had this candle forming. So I definitely think we'll slowly start seeing some buying pressure from at least 130 to about 134. You could swing trade this thing all day long, setting stops below like 125. So you risk $5 to possibly, make 15, which is a 3-to-1 risk and reward, which is really good. The next one here is AMD. AMD is very similar to NVIDIA. They're huge competitors with each other. For me, guys, very similar situation. A lot of analysts are downgrading this thing. It does have some old resistance that acts as new support now. Hit it once, twice, 3 times. So now we have this, candle forming. I think we'll start to see some buying pressure start stepping in from at least 97 to about 108 to 110 in the short term. And the long-term outlook for this is very, very strong, and I'm super excited to see kind of where it goes. Looking at the past couple of earnings, they've always done pretty decent here. So I'm super excited, guys. For me, this is an absolute steal under $100. The next one here is the one and only Bank of America. Bank of America, for me, guys, is a good company, right? The reason why I love it is because you can get a decent dividend of about 21 cents a quarter. Plus, it has okay earnings. It does have that general upward trend, but anytime you evaluate stuff, you need to draw out that support. And that's kind of what we've established here, is that $39 mark has that tendency to be the hard support for this stock that it loves and needs. So you can see it hit it once, hit it twice, hit it 3 times. I definitely think there's an opportunity from, $39 to about $43, and you could set your stops below the wick down here at like 37. So you pretty much risk $2 to possibly make upwards of 5, which is a 2-to-1 risk and reward, which is pretty decent. But you're also getting these dividends that are going to be paying you to hold the shares. So guys, these are some of the top stocks that I am buying right now. I'm super excited to see kind of where they go. So I hope you guys enjoy it. If you guys got anything in value out of this video, hit that like button, subscribe. We will see you guys later. Remember to stay happy, stay positive, stay safe. And if you guys want to sign up with Moomoo, you guys can get a couple free stocks. So make sure you guys do that. We'll see you later. Remember to stay happy, stay positive, and stay safe. Take care.